Zoom recording. What I'm going to do, I'm going to start with some questions that I saw in the room. And then we'll just take it from there. Like always, I don't pre-plan these things. I just go as I see fit. So let's see here. One of the questions was in regards to what I posted this morning. They couldn't see the charts. I don't do that stuff. I don't do the tech stuff. But normally when you click on the attachments, you should be able to see the charts fully. Like for example, like here, post to this, post to that. If you click on the attachments, you should be able to see it here, 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 here. All right, so let's see what we have here. Sorry, Frank, I can't make it since we're hosting a dinner party tonight for friends. Okay. Question, do include or exclude ETFs in your scans? If included, for example, XLE and SOX came up, would you then drill down? Best wishes. Okay. So the question is, do I include the ETFs in my scans? I do. And I'm going to show you here. Here's what I normally do. Here's my flag stocks, which is, as I'm going through charts, I might notice something that's not quite ready, but I have an interest in that chart. So I'm going to flag it. I also have the FANG names there as well, because they're very important. So I have that. Here I have the inside day, right? So on Friday at the close, you had 287 inside days. And what I typically do very simply, after I go through all the individual stocks, I'll click on ETFs and I'll just go through them as well. And I'm looking for, the same patterns I'm looking for individual names. I'm looking for these as well. Down 3 days in a row, inside day, etc. So yes, I do include them. And sometimes I do drill down. Typically the two sectors that trade as one, which means, or three sectors that trade as one, which means if one stock is running, they're all running. That's just typically the energy sector, the gold mining sector, and the cannabis stocks. Those three sectors typically, when they're moving, every stock is moving. But sometimes, yes, like for example, if I go through the inside day list, the individual names, and I come across a lot of individual energy names that have inside days, or gold mining stocks that have inside days, I'm going to look at ERY and I'm going to look at GDXU immediately, because in those particular sectors, I much rather own the triple ETFs and the individual names 9 out of 10 times. So yes, I do include those. The same thing with the down 3 days in a row, which I have here. After I go through through all the individual names, I'll just click on all stocks and go to ETFs, and I'll go through these. And it's the same thing. I'm looking for setups. And the key is with some, when you're doing the ETFs, since it's a basket of stocks, you should be able to feel more comfortable putting bigger size than you typically do on an individual name, okay? Let's see what other questions we have here. Is there a current buy list or past results compiled anywhere? I watched the videos and the setups. I understood and have experience with them. All is good, just trying to learn the best way for me to manage this. Right. I don't, yeah, I don't, again, I don't care about the past results for the most part of my watch list. I care about the trades that I took, right? Those results is what I care about. And, I try to post what I did this morning, the equity curve of all the trades and the trades that I've taken. With the watch list, with the rolling 5-day watch list, this is my main screen here, okay? My main screen has the rolling 5-day watch list, which means the watches of the last 5 to 6 days. It's got my holdings here, what I'm holding as far as trades are concerned. It has the flag stocks here, and then it has some scans here that I go through throughout the day. For example, this is intra ID. So every morning, what I do is after I go through the inside day list, what I do is remove all symbols. So what I do is I'm going to do this. I'm going to go through the inside day list. But then as well, I'll copy all these names, copy all symbols to intra ID. So that way they'll come up here. And then when I click on scan, what it does, it just gives me all the stocks that printed an inside day that are through the previous day's high, right? So that way, for some reason, if I missed one, like at 3 o'clock, 3:30, I'm going through this list to see if I missed the name that I should have had on my list. Or maybe at 9:45, 10 o'clock in the morning, after all my orders are done, I'll go through this to see if I missed something or something is popping up, okay? So this is one way to do it. If for some reason if you have time and you are in front of your screens and you don't want to go through 400 names that printed an inside day, this is a way to do it, where you put all the inside day names on a little scan. The scan is, for it to trigger once it goes to the previous day high. And then all you have to do is wait. And once you look at the setup, if it's a setup that meets your criteria, then you take it. If not, you skip it, all right? But the rolling 5-day watch list, very simply, it tells you how stocks are trading, right? Are they following through? Are they, just kind of like stalling out after the first day? That means you should be taking profits quicker. It also tells you when you go through them. For example, here's a list from 729 FNGU. At 982, it went to 1137. I don't know, plus 15% almost. You ask yourself, why didn't I take this trade? Right? STAA going through 8040. I think it went to $87 a share. If you didn't take the trade, ask yourself, why didn't you take the trade? CRM also did well. CI did not. We had to take it off the list because of earnings. But, this tells you what's going on with the market and how stocks are trading. So every day after I go through my list, I go through this as well, because sometimes some of these stocks might not trigger on the day they're on the list, but maybe they're still, maybe it's still a good setup the following day. So after I go through all my lists, I'll go through all of these and say, okay, maybe this one didn't trigger, but it still looks good. I'm gonna, redo the setup all over again. LABU A1, hold on. So for example, I'm looking at this and I see a 44% return, and I'm saying to myself, why didn't I take this trade? 8-1. Okay, so here it is. So the stock was here on the list on 8-1. Right? Which means that it had to go through this high, and it did not go through that high. That's the reason why I didn't take the trade. The next day, you can consider this a setup as well, and it was off to the races. AVLR. So you have to look at this so it can give you clues of what the market is doing, how stocks are trading, and also it tells you, trading is all about execution. Nothing else matters. Trading is about execution. We all have the same names, the same list. We all execute differently, okay? And part of execution is, are you putting the orders in? Are you sizing correctly? Are you taking profits? Are you not taking profits? We all get the same names, have the same list, same buy stops. It's all about whether you're executing or not. Shop did well as well. So as you go through this, you have to ask yourself, why didn't I take these trades, whether they worked out or not? Let's see what else we have here. Okay, hi, Frank. I'm relative new here. What percentage of your position do you typically sell at each target? I've been selling 25% of the position at plus 5%, 25% at plus 7.5%, and plus 25% at 10, and 25% at 15%. So a lot of it depends on, for me, again, how stocks are trading. Are they stalling out on the first day? If they are, I'm probably going to sell a lot more on that first day. Are the stocks on day one, day two, day three, day four, or day five? What we're looking to do, what I'm looking to do is I'm looking to take advantage of these little swings that happen in these short-term time frames. 1, 2, 3, 4, 1, 2, 3. These little bursts is what I'm interested in. I don't want to sit through sideways action or down action. So I want to sell the stocks that are in days 3 to 5 and take that money and get involved in stocks that are just in day one. So if for some reason it's day 5 or day 3 and the stock is only up 2%, then I got to start selling a little bit more than I normally do. Because typically, like for example, on the first day, the stock goes up 5%. I have an order to sell 5% of my position at 5%. Then I have an order to sell 7.5% of it at plus 7.5%, 10% at plus 10%. And then once I get to 12.5%, 15%, then I'm increasing that size. But if for some reason the stock is already on whatever it is on day 3 or day 4, and it's only giving me 5%, then I have to increase my sales. I can't just sell 5%. I got to get rid of it. Okay. So again, a lot of it has to do with the current market environment, how are stocks reacting? And on what day is that stock at? Is it in day 1, day 2, day 3, day 4, day 5? And if you look at Labu here, look at this little burst right over here of 4 or 5 days, right? And then here, another 4 or 5 days. And we went long here at 714. And then after the 5th day, the stock kind of like went sideways for roughly 18 days, 18 trading days, right? So I don't want to sit through the sideways action. I don't want to sit through the correction. I'm trying to do this 1,000 times throughout the year. I want to take advantage of this move here. I want to sell the stocks that are on day 3, 4, 5s and get involved in stocks that are on day 1. Let's see what we have here. I have also noticed that your setups in the last few days have been from V-bottom like pattern. I'm interested if you're trading those instead of, let's say, the strongly uptrending stocks because of current market structure. Okay. In the short term, stocks go up from 52-week highs, 52-week lows like LABU. Okay, stock is up, whatever it is, from 4 to 12 and from a 52-week low. All right, it would be ridiculous for someone to say, well, I'm not going to look at this trade here because it's trading near 52-week lows. This stock just tripled. So on a yearly basis, the momentum might be extremely weak. But on the 3-month basis, this is one of the top momentum stocks or ETFs that there is right now. So in the short term, what we're looking for, 3 to 5 days, stocks go up from 52-week highs, 52-week lows, and the middle. Okay, we're looking for contraction, right? We're looking for mean reversion trades. So, and if you look, I have no interest in getting involved in a stock that's holding up well if it's a sloppy stock. I mean, if you take a look at some of the stocks that people love right now, like SWAV, yeah, it's holding up well. Look how sloppy this stock is, right? It's just a sloppy stock, and it's gone from here to here, up 11% in the last 28 days, whatever the case may be. It's a sloppy stock. CELH. Again, I mean, this is okay. Had a nice move, but it's a volatile stock. I'm interested in stocks that trend a little bit better, that are going to give me that momentum burst so I can get in and also get out. If you have any questions, put them in the chat, please, or just, speak away. A couple of questions for my learning. Are you not taking trades today because the market is short-term extended, or is there a lack of setups? Right. On this particular day, I had something going on in the morning. I was running late. and I had to do something at the open, so I couldn't take any trades. There's certain times that that for some reason I might not want to take trades. Maybe I'm long an inverse ETF and I don't want to go long anything until I get rid of that inverse ETF. That's something that I've been doing lately. All right, so we covered the rolling 5-day watch list. We covered what to do, how to do it with the rolling 5-day watches. We covered the inside day list and the down 3 days in a row, and ways that you can use this in the intraday basis. If for some reason you're at your computer and you have time and you don't want to go through 287 stocks, you can sit there and just wait until they come up on this scan, and you look at it. Oh yeah, this looks like a good setup. I'm going to take it. And that's it. It's that simple. If you don't have the time to be in front of your computers, or you don't like to do things on the fly like I don't, then you do your homework before the market opens, and you have everything set up before the market opens. Before the market opens, I already have my list. I already have my alerts put in place, okay? So I'm going to have all my alerts here before the market opens, every single one of them. I'm going to have all the names on the list on a Google sheet, and I know exactly how much to buy depending on how much I want to risk. And then it's just a matter of putting the orders in and hitting the transmit button. And the market is going to do whatever the market is going to do. So it's either going to trigger or not trigger. Okay. If it triggers and my order is in, then everything is completely out of my hands. The stock will either work or not work. Can I take a short trade using the same strategy we use just in reverse? Yes, you may. Yes, you can do that. So let me just give you, for example, the inside day list. The inside day list, this is good. You can use an inside day for a long setup and also a short setup, right? Here's a stock up multiple days in a row. Here's an inside day. It's the same exact thing. You short through the low. Here's another one. Stock is up 1, 2, 3, 4, kind of like 5 days in a row. Here's an inside day. You can do the same exact thing. So these scans are based on the way the market trades. So we have a scan that prints an inside day, and you can have a stock that has a blow off top and then it prints an inside day. You want to short the stock through that low. As far as down 3 days in a row, this is also something that's just based on market structure, the way market trades. You have mean reversion trades. I have a scan, which is just the opposite. Up 3 days in a row. And it's just the opposite. It's going to give you all the stocks that are up 3 days in a row. Okay. Or more. Melly, 1, 2, 3, 4, 5, 6, 7. Here's an inside day. So if you wanted to short, if you wanted to short this stock for whatever reason, you can say, hey, I'm going to short the stock through here. Here's the purple lines, the 200-day moving average. I want to short the stock through whatever it is, 1007.24, and my stop is going to be right over here at 1056.64. So you can do that. So here's an up 3 days in a row scan, which is today's close is higher than yesterday's close, and the close in the second day is higher than the third day's close, and the third day's close higher than the fourth day close, whatever. And it's going to give you all these names right now. We have 1,147 names, which is a lot, which tells you that the market lately has been doing well. And a lot of stocks are up 3 days in a row or more. And I wouldn't be surprised if we see some type of consolidation and pullback. So yes, just reverse the scans. All right. So let's go through the Tesla. Oh yeah, Tesla's a good example. Up 1, 2, 3, 4, 5, 6. You would have shorted here through this low. It's down 6%. This one looks good for a short, but it's got to go to the previous day low. Here, 1, 2, 3, 4, 5, 6, 7, 8 days. And if you look at the stock, it hasn't penetrated the previous day low. So that'll be the trigger, and that'll change the pattern here in the short term. Here's another one. 1, 2, 3. Here's an inside day. You can probably short through here, put a stop over here, even into shorting. This is short-term extended, right? And if you look at these stocks, Here's what happens. They go up for a few days and then you get the down to consolidation phase. Here, 1, 2, 3, down. Here, multiple days in a row, then down. Here, multiple days in a row, down. That's the reason why when you see stuff on Twitter and on StockTwits, and people are talking about these cookie cutter breakouts that just because the stock is getting to a previous resistance, they're like, oh, that's a breakout, without taking into account where the stock has come from. Where the stock has come from is more important than the fact that it's breaking some old resistance level. Okay. Like, for example, this breakout here, let's say if you wanted to call this a breakout, this breakout is prone to failure because it was already up 1, 2, 3, 4, 5, like 10 days in a row from 400 and 500, right? Every now and then the market would do like, we'll give you like a month out of the year where these type of breakouts might work. And you're going to start, you hear people say, lockout rally, which is the most ridiculous thing in the world. That hasn't happened since 1999, or where some of these extended breakouts continue to move on. But the point is, it's extremely important to know where the stock has come from, because if you go through charts after chart after chart in the short term, you're going to see the same pattern. And if you buy something like this, where the stock is already up, like for example, I wouldn't be surprised if they had this as a breakout once it broke here, 514. If you buy something like this, your expectation is to sit through sideways action, consolidation, and also a decent pullback, okay? So that's that. Are you risking the same percent per trade, even with ETFs compared to stocks? Look, a lot of it depends. All right. So you should feel comfortable risking more with ETFs, right? Just because it's a basket of stocks, not just an individual name. However, if my last 15 trades have been losers, right, I'm not going to put more money into an ETF because my last 15 trades have been losers, right? So if my last 15 trades have been losers, I'm going to base my risk based on my recent trading, okay? Then that means I'm not seeing the market well, or something is going on, okay? But all things being equal, things are going well. There are a lot of times that I put more money into ETFs than individual stocks, just because the risk is less, because you don't have the individual company risk. However, like I said, if my trading is not going well, then I'm minimizing across the board, whether it's individual stocks or ETF. For some setups which are simple, like down 3 days in a row and inside day, that you have secondary characteristics. Right. Again, on those things down 3 days in a row, the trigger is going to the previous day high. That's number one with the 3 days in a row. And the reason why we have that, because 3 days can turn into 4 days, 4 days can turn into 5 days, and so on and so on. And if you go on for example, to the 3 days in a row, if you go to the list and you just take your time, you're going to realize that what you have most of the time is a pattern of lower highs and lower lows, right? Here it is. 1, 2, 3, lower highs and lower lows. And then we break that pattern. And then here it just completely reverses course. And now we have a pattern of higher lows and higher highs. And that is not broken until this day. So if you're going to go into the 3 days in a row, right? Number one, you have to wait until it turns, until you have a change of the pattern. And that change for me is going to the previous day high. If you wanted to make it as mechanical as possible, I like to sell on the way up, right? And if I really, really wanted to make it mechanical, then I'm still going to sell some on the way up. But then I would use something like this. I will put a stop at 4 o'clock at that day's low. So in this situation, you would have been stopped out right over here at 73.47 on day 1, 2, 3, 4, 5, 6, 7, 8, 9 on day 10, right over here. Okay. So when you look at these stocks down 3 days in a row, here it is. Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. It finally changes and you get this this higher high. But then the next day, if you're using the stop where you're raising your stop from this low to this low, you would have been stopped out here at a loss, at a loss, right? But again, here, same exact thing, down multiple days in a row. Finally changes and it goes through the high here, and you're in this trade. If you do it mechanically, if you wait until the previous day, if you use the close of the previous day or the low of the previous day, you would have been stopped out here on this day. So again, it's just a pattern of lower highs and lower lows. And the reason why we wait for that pattern to break, here's a perfect example. Down 1, 2, 3. Now you can say, oh, it's down 3 days in a row, mean reversion, but look, continues to go down. And it doesn't break that pattern until pretty much right over here. And it's down 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row. That's the reason why we wait. As far as the inside day is concerned, again, an inside day is just a candle that's a very tight candle. It's a contraction candle, but the setup of that inside day matters. Okay, you can use an inside day as a short, you can use it as a long. So the setup of that inside day matters. The ideal inside day is when you have a stock. Let me just show you right over here. The ideal, okay, here, let's see if we have one here, ATRT. Right, so the ideal inside day here is a stock that has fresh momentum, and then it goes sideways at 10 to 15 days, and then at day 10, 11, 12 to 15, you get that little contraction. You get the tight candle, and that typically tells you the stock is ready for a second move higher. So in other words, the setup matters. Right here, here's a stock with a lot of momentum. Here's an inside day, this yellow candle. This is not my type of inside day. Why? Look at the range, $15 to $25. This is not my type of inside day candle. Here it is, right? Here's an inside day candle on very small volume. This is the lowest volume in the last 10 days. This is a nice mean reversion trade. Here is another one down 1, 2, 3, 4. Here's that little inside day. This is my type of inside day candle. So the setup and the context of the chart matters. It's not like, hey, we have an inside day, let's just buy it. No, that's not the case, right? So the secondary characteristics, CLF. Let's see, CLF. Inside day, it was also an NR7 day, which is also the same thing, above the 10 and the 20. I guess I'm asking, what is important to you in narrowing down a list to 45 well, I never have a list of 45 inside day candidates. Right, I think my list in a really good market, I might have 16 names, and they're not all going to be inside days. So this one, it was, look, it was just, it was a bottom pattern. And some of the stuff that I'm going to tell you, Dan, some of it is just experience. I can't even tell you. So, once you do this for a while, sometimes you have an eye for it. And if you remember, on this day, almost every single stock on the list was a commodity name. Cliff, AA, Alcoa. What was the other one? Cliff, AA, Alcoa. CENX, Tech, AA, CLF. So I just saw, I'm going through the inside days. I see a bunch of, and that day, this here is what it was. XME. On that day, I went through the inside day for the ETFs first. XME is another, metal and mining. These things trade as one, right? The only reason why I didn't go with the XME is because there's no double or triple. And if there is, it doesn't have that much volume. But that day we had Alcoa, Tech, Cliff, JDXU, and JDXU, right? So here's an inside day. And the first thing I did was, I went through all the names here, and they were all there. So some of the stuff is just based on experience, right? So I might have a good eye on what's about to move. And that's what typically is usually the case. But also, as you're going through charts, you're going to start to realize what's working, right? Lately, a lot of stocks trading near the bottom were working or are working, a lot of them. So that's, you pick up these clues as you go through the scans. So inside day and NR7 is pretty much a Ryzen 10 and 20 EMA. Again, that's also important. And if you believe in EMAs, we don't trade the market, we trade our beliefs about the market. So if you believe in the 10-day and 20-day and you only want to buy stocks trading above that, all you have to do is take the inside day and add those two criteria, and that would narrow down the list of 287 names to a smaller list. Okay. And also consider what I just did, which was I took all the inside days, I put them here on this scan, and at the end of the day, you'll see every inside day that went to the previous day high, and then see if you start to notice a pattern. Why did I miss this stock? Was I going through too fast in the morning? And you start to notice what's working and what's not working. Tech. Yeah, tech is another one. Tech is just something that I saw, a bottom fishing pattern, right? That's what's been working lately. I saw the XME, again, which is an ETF that printed an inside day, metals and minings and metals and minerals, whatever it is. These stocks, they normally trade as one. It's a pattern that I normally take, and I just took the trade and it worked, right? In a different market environment, this trade maybe doesn't work. It doesn't mean that the pattern wasn't a good pattern. It just means that sometimes, a lot of times, trades are random and unique, and you have to accept that. You put the trade on, you accept the risk, and you do it over and over and over and over again. But in this particular day, if you take a look at the list, Alcoa, XME, Alcoa, Tech, CLF, and GDXU, all metals, minings, commodities. And to reiterate, some of the stuff is just experience that I couldn't even tell you why. Sometimes it's just you see things, and that's that. Let's see what else we have here. Right. So normally, like I said, the scans, the inside day scan and the down 3 days in a row scan, those scans are based on the way the market works, the way the market moves. And because those scans are based on the way the market moves, you can use an inside day or down 3 days in a row or up 3 days in a row. You can use it in all time frames, minute time frame, 5 minutes, 15 minutes, 30 minutes, weekly, because stocks trade that way. If you take a look at, for example, let's take a look at Tesla on a 5-minute chart. Here's an inside day. And if it was consolidating, you can take this inside day through that high. Here's down 3 days, 4 bars in a row. 1, 2, 3, 4. This would have been the trigger right over here. This one didn't work out. But again, it's all the same exact thing. If your scans are based on the way stocks move, you can use them in different time frames. Okay, let's take a look at some of the other names. Apple. Here down 1, 2, 3, 4, 5, 6, 7 candles in a row. Finally breaks the pattern right over here. This didn't work out. It didn't work out just because if you would have raised your stop from here to here, you would have been stopped out here. If you would have been more loose with your stops, then it would have worked out. But again, you have to base your scans based on market structure, on the way stocks move. So my recommendation to everyone is you read all the books, you read all the blogs, you have all these things. You got to buy stocks with sales and earnings and growth, and they got to trade near 52-week highs. Different things matter depending on your time frame. Okay, the longer your time frame, then the more the story matters, or the earnings or the sales. The shorter your time frame, really, that stuff doesn't matter. Okay, and my suggestion is always take a look at the top performance stocks for this year. The #1 performance stock this year is WeTrade. We Group. Stock is up 415%. Who is We Group? Let me answer this question first. What percent of total portfolio should be allocated to core holdings, SPY, Qs, and IWM? That is completely up to you. Everyone is different. How old are you? How young are you? How much time you can dedicate to trading? So where is the market? Is the market near 52-week highs and it's been running for 3 years, right? So a lot of it is different. I buy on the way down, right? So I buy on the way down. That's what I do. So here, I took some notes here. 4/28, 2022. I have here some clients, 21% in ETFs. This one had 26%, 16, 28, 21, 21, 29. That was a 4/28, right? 4/28. Where was 4/28? Right over here, okay? On 5/13. 5/13, right over here. This one client went from 12 to 18%. This one went from 21 to 37. This one went from 26 to 35, 28 to 40, 21 to 30, 21 to 37, 29 to 40, 27 to 38. So I bought more on the way down. 6/17. Where is right over here? This one went from 36 to 41, 25 to 28, 10 to 20. So again, a lot of it depends. I think you should have, a lot of it depends on how's your trading, right? You can have as high as 60%. You can have as low as 40%. A lot of it depends how much money you need to trade the short-term trades and how comfortable you are taking the short-term trades. So on the way down, I'm a believer that you buy the ETFs on the way down, and the lower they go, the higher your allocation should be, okay? March 2020, after COVID, I was up to 50 to 55% across the board. As the market went up, I trimmed, because when you have a corrective market and the market is in the correction, everything moves as one. Every stock is going to follow the market for the most part, or eventually it will. This year, the last man standing was the oil names, and they took them apart right at the very end, okay? And that's exactly pretty much when the market bottomed. So on the way down, you want to buy those ETFs. The average intra-year decline for the S&P 500 is negative 15%. So at negative 15%, you want to start buying some. Slowly but surely. When you buy ETFs on the way down, would you ever take stop on any of your buys? No. I have not. I have not. The only stops that I've taken that I bought ETFs that I bought that I was looking to buy as core holdings are the more niche ones, like for example, ARK. I bought ARK and I was looking to buy ARK here bought down 31% from the highs, whatever the case may be. And I bought this and I just sold it. And I sold it because I just didn't believe in ARK. Didn't believe the way she did things. So I just took it off. When I'm buying the Qs, the IWM, and the SPY, I'm thinking long term. I'm thinking the next 10 years, right? I'm going to hold these things for a long time, which is not the case, right? It's not the case. I'm going to sell them once we get overheated. I'm going to sell a piece of it. I'm always going to hold on to a piece. So I'm not taking stops unless if it's a trade, is a trade. But if I'm buying the panic, like I did, 6/17 here. Here, 5 12, boy, down 18% at 390. If I'm buying these panics, I'm buying these panics for a longer hold. For a longer, I'm not buying the SPY or the IWM or taking big positions because, oh, we just broke a 52-week high and it's blue, sky blue territory. I don't believe in that stuff. And if you look at the indices, for the most part, they're mean reverting vehicles. Look here, right over here, oh, blue sky territory. And then it just, it goes lower. Here, blue sky territory, and then it just chops. So I like to buy them on the way down. And slowly but surely, 5, 10, 15%. Once I start seeing, some real panic, once I start getting phone calls, oh, what should I do? Should I sell now? Then I'm buying a little bit more. All right, so let's go back here to the year-to-date winners. This is where you wanna, what you wanna go through to really tell you what really works and what doesn't work, what's a myth and what's not a myth, right? And a lot of it depends on your time frame. Here is WETG, right? We Trade Group, sales down 19%. I mean, like, who is this, right? And here's a stock that was trading how many shares here? 0 volume, right? No volume at all, 600 shares. And then suddenly it has a big day. Here are these purple candles, the purple candles on my screen. What that means that the stock on that day was up 4% or more on 3 times the average 20-day volume. Okay? So on this day, the stock was up 4% or more, and the volume that day was 264,000 shares. The average 20-day volume was only 13,000 shares. Now, this wouldn't hit my screens because I have a volume filter. It just wouldn't hit my screens. But here's the scan that we use, which is this one right over here, plus 4% on 3 times the average daily volumes, and it looks at all the stocks that met this criteria within the last 21 days. Okay, here you have an update, and look here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. On days 10 to 15, what you tend to see is the contraction in price and volume. You get that low volume, you get the price contraction, and that's when you know the stock is ready to make its second move higher. Okay, let's go to TRVI to see if we see the same thing. Here's TRVI, up 400% for the year. Everyone tells you, why are you looking at stocks near 52-week lows? This stock is trading near a 52-week low. Happens to be the second best performance stock this year. Here, the stock is trading 184,000 shares. And then here, the purple candles, right? Up big on heavy volume relative to what the stock trades. And when you see this, what you're going to want to wait for is some type of consolidation. If you're a fast trader, you can trade these things intraday. But you want to wait for some type of consolidation to see if you can get involved. Sometimes you get a setup, sometimes you don't. Here, the stock was down 3 days in a row. You could have considered that a setup. However, the stock, $1.35. This stock would have never made my screen because it's under $2. But the point is that, look, 52-week lows, barely trading. And if you go through the videos, the first video here from 2017, the first 3 minutes, we go through this whole thing and it's all the same exact thing. This first video right over here. Stock that's dead, barely trading. Then suddenly news comes out, up big on heavy volume, 10 to 15 days of consolidation. At the very end of the consolidation, what happens? You get the price contraction, you get the volume contraction, very small volume, and then boom, you get the second leg higher. Okay. Here's TH, another stock trading near 52-week lows. Suddenly something happens. Maybe it was the sector, oil sector. Here, a big on heavy volume relative to this stock, then you get the consolidation. Right? We got involved right over here, 429. So what does it do? It prints an inside day, right? Here's the inside day. We got involved through this high right over here. Whether it worked, I think it did. Yeah, it did. Right? So this scan is not going to keep you out of losers, right? But it's going to get you involved on the best performing stocks in the short term. So far we went through the top 3 stocks year to date, and all 3 had the same pattern. BPT, here's another stock trading near lows right before the year started, 369. Again, this oil stock, so part of it was the sector, and then here's the up 4% and 3 times the volume, and it's just a matter of trying to find a setup, right? Sometimes you'll get it, sometimes you don't. I didn't get involved with this stock until all the way over here. But again, it popped up in the scan right over here. SIGA, same thing, trading sideways for a long time, doing nothing at all. Trades 114,000 shares. Here's the big volume days, 39 million shares, 80 million shares. If you're an intraday trader, these are the stocks you want to trade, right? But then look, it's just too volatile for me right over here. But at the very end here, you start to see inside day on the lowest volume. You could have bought the stock here through this high. Here's another inside day. I got involved here on 7-1. 630 was an inside day, long, 1186, inside day through high, 4x3, which means that this is a stock that had a candle, one of these purple candles in the last, whatever it is, 21 to 25 days. Okay. STNG, here's another stock. Where did, up 200%. Where did it start from? A 52-week low. Did it give you a setup? Nah, not really. If 30-year SPY is roughly the same as the current I-bond yield, should I buy bonds? I know nothing about bonds. I know the SPY. Nothing about bonds. I mean, the SPY, the average gain for the SPY, I think for the last 30 years is about 10%. I don't know if you're getting that with bonds. SURG, again, up 205%. Stock trading near the low. So all these stocks have all these purple candles. VTNR, same thing, trading near lows when the year started. Here's the purple candle. So if you want to know the way the market works, what's true, what's not true, just go through the year-to-date winners. See which of these stocks that are year-to-date winners, see which of them have earnings and sales. Take a look from where the move started, right? A lot of times you're not going to catch the first move. You're not going to catch this first move unless you've been holding the stock for fundamental reasons, and then you get lucky, you get that first move. You're not going to catch that first move. You're looking for this move to happen, and then you're waiting for the consolidation, the tightness, and then you want to get involved on these little rip higher. CEIX trading sideways for 1.2 years. You know, the bigger the base, the higher into space it goes. Took off, right? You want to see, where did these stocks, where did the move start? How long did the move last? Okay, here was 1, 2, 3, 4, 5. You can call it 5 days. Here, only 3 days, and you get to here, you get the push higher, the pullback, push higher, the pullback. Here lasted a few days, then you get the pullback, and then it goes up for a few days, and then you get the pullback. Again, what we want to do very simply is we want to take advantage of this move higher. We want to get rid of this stock on days 3, 4, 5. We want to take this money and get involved in another stock that's just getting started. Okay. Some of these trades are going to be random and unique. Here's another stock that people love. It's holding up well. The market made a low. This one made a high. And again, if you hold it long enough, it might go to $100. But it's a choppy stock. It's choppy. Okay? You're going to need some wise stops. But again, every stock here, for the most part, this one did not. This one did. Purple candle, purple candle, purple candle, purple candle, purple candle. So that's a scam, to reiterate, that's going to get you involved in the biggest short-term winners. It's not going to keep you out of losers. You're going to have losers no matter what scan you have. But it'll get you involved in stocks, the fastest moving stocks in the short term. Any questions, guys? So here's what I'm going to do, right? At some point tonight or tomorrow in the morning, this is the top 400 names, where I'm taking the top 100 best performing stocks on a 3-month basis, 6 months, 12 months, and year to date. Okay. Right now, you have 280 names here. Here, all of these are the ones that are also in the 4x3 scan in the last 40 days. So if I wanted to narrow down this list, I can say, hey, I'm only going to look at the stocks that are also in the 4x3 scan. With that being the case, that's roughly only 144 names. Let's say, for example, I only want to look at stocks that are consolidating, that are very close to their 21-day moving average. Then I can do this. I'll do a scan, and a scan will be every stock that's within 4% of the 20-day moving average. That narrows down to 42 names if I wanted to go that route. And now you're looking at stocks that are near this yellow line, which is the 21-day moving average, right? So that's how you can narrow down names. All right. This stock almost made the list on Friday. The problem is that they reported the 8th. But here's a stock trading near lows, big volume and big news, 82 million shares, trading sideways for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. The candles here, wide range. Then here they start to tighten up. So I can go this route, and I just narrowed down the list from 288 names to 42. Nothing there. I'll go on to the next list. I'll do the same thing. That went from 250 names to 63. Since I have the time, I like to go usually through all the names, because I might come across a name that might not be ready for today. It might, soon be ready, and I'll just flag it. And I go through my flag list every day. I only have about 100 names in that flag list. And I put names on, I take names out. And after I do that, I went to the top 400, and I'm going to go here. I'm going to go through my flag stocks. I'll go through that. I'll go through the inside day. I'll go through these, and then I'll go finally through my rolling 5-day watch list. I'll jot the names down. With the previous day high, I will also jot down where the stop will be. Then I'll put alerts on those names at the previous day high. Then I'll put all the names on the IB software. I'll click how many shares I need to buy. And then all I have to do is hit the transmit button. Any questions? Okay, so let me conclude this meeting. When you have your list, let's just take the A5, the list from A5. Say you have 5 or 6 names on your list. You don't know beforehand which stock is going to trigger. You don't know beforehand your winners and your losers. You just don't. You might have a gut feeling. Your gut feeling, your experience might give you a small edge, but you need to be able to say, yeah, look, I've seen this a million times, and this for me is an A+ setup, right? So I'm going to put more money into this one, right? But if you don't have that edge or that gut feeling, or you haven't seen that particular setup a bunch of times, then my suggestion is you risk the same amount of money in each trade. We don't know beforehand which stock is going to be the winner. You're going to be right 50% of the time. Okay. And even if you were right 70% of the time, you still wouldn't be able to tell me which ones are going to be the 3 losers ahead of time. You just won't. So your job is just to get comfortable taking the trades. Comfortable knowing that, half of them are going to be losers. It is what it is. But maybe for a lot of them, you're able to reduce that risk after the first day. Someone here in the room posted the other day, I think it was Dino, that said, hey, I've been in the room for 7 months, and the stocks, if you sell them immediately, like his win ratio, I forget what it was a very high win ratio if you sold after the first day, right? And that's the reason why you got to have the proper setups. For me, I know my setups work because a lot of the times the stocks, they move immediately to the upside. They might not follow through, but they typically move immediately to the upside. If you're chasing something that's already up 3 or 4 or 5 days in a row, chances are you're not going to get that immediate immediate move. Okay, so you're not going to know beforehand which one will be the winners and the losers, no matter who you are. You just don't. You have to accept the risk. You put the trades on, allow the market to do whatever it is that it's got to do, and you're just buying the stocks on day 1 and selling the stocks on day 3, 4, 5. And if you go through any chart, you're going to see the same pattern. Down multiple days in a row, up 3 days in a row, down, up, down. You take a look at FanDuel. I wanted to hold FanDuel for a while. Had a nice move. Then it had a decent retracement. Right? So I bought the stock in 729, printed an inside day, and sold most of it right over here. As far as my trades are concerned, most of my trades are already executed by 10 o'clock. If they trigger early in the morning, I'm going to take them. There's certain times that I don't take the trades. It might have a large spread. And I'm not going to pay up, a $2 spread. Maybe it doesn't have the volume right at the open. So I'm going to have to wait until I see more volume. I don't have a volume criteria, but if a stock only traded 2,000 shares at 933, I can't buy that stock. Okay. Because then the spread might be too wide. I might run up the stock. But once I put, again, all the names in the list and I put it on my IB software, then it's just a matter of executing trades. And if you want to learn the way stocks trade, just take a look at the year-to-date winners. You want to see if you're missing out on trades? Take a look at all the stocks on the inside day list that went to the previous day high and ask yourself, should this stock XYZ should have been on my list? And again, when you're buying these stocks, most of them are moving up immediately. And all you want is the opportunity to reduce the risk if possible without choking the trade. And here, these two videos right over here show you the difference that it makes. And I'll give you some examples here. Here's VRM. Here was a stock down multiple days in a row. The trigger was through the previous day high, which was right over here, long at 44.20, down 4 days in a row. My initial stop, the buy stop was 44.19. The initial stop was 40, which was right over here. It was a risk of $4.19. At the close of the first day, you were able to raise your stop from this low over here to this low. Remember, this pattern goes from lower highs to lower lows, and it completely reverses to higher lows and higher highs. So here you were able to raise your stop from this low to the low here. Your new risk was now $2.59, now $4.19. You are already winning. You just reduced your risk by almost half. The next day, the stock, has another move. Maybe you would have sold some on the way up, but if you didn't, your stop goes from this low over here of 41.60 to 42.53. The third day, same thing. Stock goes up, higher high, higher low. Now you're able to raise your stop from this low over here to this low. By the close of the third day, your new stop was 46.11. That's now almost 2 points above your cost. So this is the way you can reduce risk. And the same thing with any other setup. That if the stock goes up a certain amount, you can raise that stop just a little bit to that day's low. And then you just reduce the risk. If you start with $1,000 risk on any given trade, and after day one, you're able to reduce that risk to $750, $800, even $900, you are already winning. All right, any other questions? If you don't, my suggestion is spend some time going over the videos that are pinned in the room. Take some time, go over the year-to-date winners. Thank you, Dan. Go over the year-to-date winners. And also, look, you can ask as many questions as possible. If you want me to get on a Zoom call with you on a one-on-one basis, all you have to do is just tell me, ask, and I will find time to do that with you. Done it before a million times. So if you want to get in a one-on-one Zoom meeting, I'll take some time out. We'll figure out the schedule, and we'll get it done. But you got to do the work. You have to watch the videos. It's all there, and the videos are the same from 2017. It's the same pattern that is still working now. You can see that on a consistent basis today. All right, so trading well and be well. I will hope that all you guys start sharing what you're seeing. Share your recommendations. Share your list during the morning. All right, a lot of times that I might miss something. I go through charts sometimes really fast, and I might miss something. Okay, let's see if we find something here. Right, so here I have my flag, right? And I also have here basis. So when I'm seeing stocks that are basing, I'm going to put them here, and I'll go through this list maybe once a week. Okay, this one, for example, MVIS, this is on my basing list. Okay, it's been trading sideways for a while. Vuzi, we were long this one, but a report this week again, it was basing for a while. And once you have a stock that's been basing for 4 or 5, 6, 7 months in a row, especially one coming from a near 52-week low, what that means is that you have a stock here that's trading near highs, and then it has a tremendous downtrend. The sellers are in control. The stock finally gets to a level where you don't have that much supply, and or the demand is now starting to gobble up the supply. At the very end of that base, before that base takes off, what you start to see is a pattern of higher lows, which is what we're seeing here. Here's one low, 2 lows, 3 lows. That's when the base goes from what they call stage 1 to stage 2. SRPT trading sideways for a while, had a 4x3 candle here, traded roughly 3.7 million shares. This was on 7/29. It might have been something done with earnings. You take a look at it, but here's a stock. If it consolidates here, then you know that you probably you have a stock that's just getting started. It's probably just getting started on that stage 2, which might make a bigger move than just a 3 to 5 day move. GTLB, same thing. The only lines that you're going to see more than likely on any of my charts are these horizontal lines. And then if it's a base, I might just do the higher lows, right? Netflix looks good, right? Netflix near 52-week low, trading sideways for a while, up big, on big volume, consolidating. Here's the inside day. Here's when I went long. I'm still long. Amazon. Here's PayPal, earnings 4x3. This might set up here in the short term at some point. Info. Again, the only lines you're going to see here are these horizontal lines, nothing else. Avalar, which we bought and sold, reports this week, tomorrow. Coco. ALKT again here, basing sideways for a while. Here are the higher lows. So this is a stock that's not quite ready, but I put it on my base list and I put it on my flag list. I want to make sure that I don't lose it. Right, DOUL, same thing, basin, shop, sideways for a while. Right, you don't have to wait for these cookie cutter breakouts. Here, I put in the room, I said, I can't wait to see these people buy these cookie cutter breakouts after the stock already made a significant move here in the short term. And what happens? Breaks out, comes right back in. Where a stock has come from is extremely important. You cannot buy a stock here. Okay, the breakout level is right over here, 10 cents above this high, and the stock already made a 1, 2, 3, 4, 5 day move. And 90% of the markets, this is going to consolidate or go down in the short term. This is a stock that a lot of people are talking about. Trading near highs, relative strength, XYZ. Look, you can go through 1,000 charts. I'll give you 100 examples where relative strength works. I'll give you 100 examples where it doesn't work. I'll give you 100 examples where a couple handles worked. I'll give you 100 examples when they didn't work, and also head and shoulders. All right. Sometimes trades are just random and unique. You got to play out the numbers. Here's Google, sideways. All right. When this breaks out, might be a good one. Lately, a lot of the oil names I've been taking out of my flag list. There's just They're broken. I want fresh names. 2.1 years of sideways action. And off to the races. I posted a Twitter thread in the room a couple of times about basis. BITO looks okay. I have a buy stop on the actual Bitcoin right now that I posted in the room. SLB, all your names are broken. So I don't know if I'm going to have much for tomorrow. I mean, we have whatever it was, 1,000 and change names up 3 days in a row. If I was into shorting, maybe I'll look into some of those names. But I'd much rather 9 out of 10 times go with an inverse ETF if it has a setup. Let's see, SQQ. Look, this might have a setup, right? 38.53. I might even take this right over here through this high, 37.74. SPXX, same thing. I might take this right over here. Let me see how they look in the short term. So this is Friday. We had the gap down due to the job numbers. We closed the gap and then we sold off, right? And this is where I took the SOSX, the short semi trade, as when we came back over here and it was looking real good. Then we had to bounce, no problem. But this over here, this little high over here, I did not like. But with these trades, so if I'm looking at the SPXX, which is the inverse ETF, the S&P 500, and I'm considering shorting, I might take it through this low, 411.43, right? That will be, this is the 3 o'clock low. I'm looking for the 3 o'clock high, 2025. I might put a buy stop right over here. If it breaks this low, I want to go, when it breaks this low and use this stop, the high here as my stop. So I might do that tomorrow. Consider some of these inverse ETFs based on the 30-minute chart. Let me just write them down here as this. TZA, no. XLF, no. Okay, well, that's all for today, folks. Thank you for your time. Trade them well and be well.